In this video, traders, we are going to look at drawing too many support and resistance lines, how we overcome that, and how do we then trade only the key levels that are meaningful to us. Stay tuned. Hey guys, warm welcome to you. All right, so question from viewer, subscriber. This is a great question, by the way. Do appreciate this, as I do all your questions, comments, likes, shares, all that kind of good stuff. All right, so Timur Muhammedov, he's written quite a long question, but effectively what he said is this. He's basically said, I've got an issue with support and resistance in range-bound conditions. My problem is that I draw not only the upper resistance and lower resistance, but also several levels in between those. This makes it hard to open a position because I think the price may bounce back from any of those levels. I hope I've explained my issue. I'd appreciate your help with that. I think got an answer at some point, and there's another reply from that. But that's a really good question because I have struggled with this before, not anymore because I kind of found a solution that works for me and I don't get involved in this anymore. But great question, great question. Okay, so the question is this. If you're in a range-bound market, you've got your support and resistance levels. Let's get some colored pens out and let's go crazy with some colors. So you have your key levels here. Imagine that's your low of the range. Okay, maybe it's done a few more, but that's your low of the range. And there's your high of the range. That's your standard kind of support and resistance levels. And that looks all very well. But the question is this. There are some other levels in there that you've drawn on which are going to affect whether you want to pull the trigger or not. So for example, in this really amazing example, guys, we've got another one here, haven't we? If we drew that, we could say it's definitely resistance there. It almost became support. And we could probably even say, well, what about this one here? There's a level here. Okay, and we can maybe even go one more and go, well, there's a level there. That was pretty good. You know, what about this little level here? Is there a level there? What about this level here? It seemed like there was a high there and also a low there. You see the point? You see what we're doing now is we've got our primary ones here. Let's put 1 and number 2. Those are our primary, the high and the low, the ones that everyone's looking at. But we've gone a little bit too deep into this now. And we've gone, well, that's a level, that's a level, that's a level, that's a level, that's a level. And the issue now is that when we're pulling the trigger, let's say we're pulling the trigger long here. Let's go with the green, and green doesn't show up that great on the camera, but if I rub it in, that should be good. Doesn't want to take the long there because you're thinking, well, actually it might stall at this level, it might stall at this level. There's no meat in the trade. I don't want to take the trade. Okay, yeah, theoretically I'd love it to come up to that level, but there's so many kind of stumbling blocks along the way. All right, so let's have a look at the solution for this. The key to this is to say to yourself, right, I need to limit what I'm putting on my chart. I can't put every single level on. And I need to think gaming theory. Who cares about a lot of these levels? Okay, if you imagine this level here, yes, it was a high back here. Yes, it was a little bit of support here. But what's the chances, having done all this work, that's I'm going to hold any weight whatsoever once it gets there? Pretty much none. It may do, as any level may do, but the chances of that holding and being significant, especially if this is a range-bound scenario, is low. Because the people who are really interested, the bigger money, the institutional money, are interested above here and below here. They're interested in that. That's what they're watching. They're not interested in the little nuances in between. However, something to be said for giving preference to levels that are the most recent. So the argument could be, well, because that's the most recent, I need to be a little bit aware of it. And I would grant you that. I'd say, okay, that's fine. Maybe you'd want to wait for it to clear that before you took the long. However, this level here and these levels back here becoming irrelevant because they're so far back. And the problem you've got is the more stuff you put on, as you quite rightly pointed out in the question, is that you'll never pull the trigger because you'll always think the price is going to stall at these levels. So the key is to really reduce the levels you've got. Just say, okay, if it's not a really significant level, I'm not going to put it in. Now for me, if I was looking at this chart, I would say, obviously that's a good level, but I would have this one. You know, this would be my only other level that I'd have because it's quite significant here. It's taken quite a while to go through it. It nearly bounced off it here. We stalled a little bit there. You know, and I'd possibly say number 4, possibly. But now I'm getting a little bit too much into it. What I would rather do, and this is a kind of, I'm getting ahead of myself, but may as well talk about it now, is I'd rather say, okay, let's create zones of interest. Rather than having those strict levels, if there's a level that's near to it, let's have a zone. This is a perfect zone, guys. Look at this. This is a support level, and the last time it was there, it kind of held and it flagged there. So why don't we make that a bit of a zone? Why don't we say, okay, well, that's resistance level 1 zone. Number 2, it's not a zone, it's a clear-cut level. But we have got maybe a zone here where we need to be a bit careful, right? Between 3 and 4, there's a level. So rather than having 3 and 4 as distinct levels, we can have it as a broad zone. And we can say, right, let's forget about everything else. Let's have that zone that's somewhere in the middle, but in the upper, slightly up. It's probably like 55%, isn't it? And we've got the high, the low. So maybe if we're taking that long at this level, we can start to scale out the position, or at least monitor it as it enters this midpoint zone. Because we know there's been a lot of interest there, and that's the one kind of area that we've gone, right, okay, there's something going on there, so maybe it's prudent to manage the trade, maybe it's prudent to reassess the trade as we get there, or maybe it's prudent to scale out the position, take some off the table, start to ratchet the stop up, you know, play around with the trade a little bit. That's the level where I might want to manage things a little bit more. This one I can get rid of, this one I can get rid of. Now all of a sudden I've got a much cleaner chart. I'm not going to put it on here, but I've now got a much cleaner chart. I've got my high here, I've got my low here, and I've got a little zone in the middle, which is an area of kind of target, if you like, or first port of call. I've also got this little zone here, haven't I? Well, so now I'm much cleaner. You know, I'm not messing around with stuff. I'm not got all these lines on my chart, not worrying about the little intricacies. I'm not saying, oh, there's one here as well. Oh, there's a little one here as well. You know, I'm just looking at the major ones and then the big ones that are clustered together, having them as a zone. That's very easy to do as well, guys, on most charting platforms. You can get the rectangle, drag it across, use the rectangle function, just click it, drag it, have it so that it's see-through and have that as your zone. Very easy to do, makes it much clearer, because then, you know, when you look working in terms of zones and areas, you're not so frustrated if it doesn't hit it to the tick. You know, if it gets to say you're high and just starts to hover there and wait, then you take the profit. You go, well, it's in my zone of area that I'm exiting in. I'm happy to take the profit on that. And so, you know, having that zone gives you a little bit of flexibility, a little bit more to play with, and is less finite. It's like, I've got to hit that level. It's got to be that precise level. So something to consider. Removing all the lines that are less relevant and irrelevant, just having kind of 2, 3 major ones, and then adding zones in where potentially not too many zones. Like I say, again, same kind of rules. Let's not go crazy and add zones everywhere. But if there's an obvious zone at some point between those 2 levels, add that in and use that as an area to perhaps look to manage the trade, or at least reassess the trade. Is the trade still valid? Is it good? You know, what do I want to do now than wait for a break of this, etc. Anyway, that's a great question. Drawing too many support and resistance lines. Thank you very much for that question. Appreciate that. And if it's helped any of you guys who are doing this, then a thumbs up is much appreciated. I appreciate your support, guys. If you are a subscriber, take care. Bye-bye.